In this video, I wanted to highlight how there are core economic pillars which support each other to make our system work as a whole. These pillars are not some individual components but interlinked crucial elements which supports each other, and any impact on one of such components or pillar may have cascading effects on the other pillars. And to understand any situation where we see a lot of uncertainties, it's very crucial to observe these pillars and understand how the economics or the global economics is flourishing. The first pillar is the monetary system itself. As you know, the monetary system is the system that is set up by the government to legalize the flow of money and to legalize the currency that we try to achieve in the economy. For example, US dollar, euro are the currencies which are legalized by the government with the help of monetary systems. This is controlled by the central banks. Central banks are the entities which legalizes this currency and makes it possible to flow it into the markets or into the system or the country itself. This monetary system helps the governments to borrow money from the future, and this money which they borrow from the future is called the government debt. So government also take debts from the system that they create themselves with the possibility to repay that debt in the near future. With the help of this money that government take as a debt from the system or the monetary system or the central bank is used for the progress of the country or fighting wars or to improve the economic activities within the countries. Every year the central bank adds additional liquidity or currency into the markets. Every year they induce liquidity into the markets in the form of inflation. Inflation can vary from currency to currency. For example, some currency may have less inflation rate, 2 to 3%. Rapidly growing economy may have higher interest rate, close to 6-7%. And it depends on the country to country basis. The country which includes a lot of inflation into the markets, like more than 20-25%, goes into hyperinflation territory, which we'll discuss later in the video. But basically, government takes money from the central banks to improve the infrastructure in the country or to capitalize on the money to improve the economic activities within the country, to trade within different countries. This is one of the core pillar of any global system or global economic system in any country, the central bank and the monetary system itself. The second core pillar is the financial institutions. As you may know, central banks are the central entities which the government uses to create or to legalize currency. But they need some distribution to distribute the money across people or businesses. This is done with the help of distribution banks, which are licensed bank legalized by the government to disperse money in the hands of the people. So what bank does, they borrow money from the central banks at lower interest rates and distribute the money to businesses, people, in the form of debts. So this is the second most crucial pillar, which is the financial system, which is basically a distribution of money within the borders of the country. The third core pillar is the global trade systems and the overall supply chain of trading that happens between two countries or more than two countries. And why it is a crucial pillar is because not every country has the capacity to produce all the goods by itself. Some countries may be expertise in agricultural food production. Some countries may be expertised in industrial activities. Some may be automakers. So the trade between the countries is a very crucial element or a crucial pillar to boost economic activities within a country. And this trading activity is usually takes place with the help of sea routes or air routes, but mostly sea routes. This system acts as a crucial element for flow of goods from one country to other. The fourth core pillar is the energy system itself. Energy is a very crucial part in any country's economic activities. Most countries don't have a specific energy source. For example, most of the second world and third world countries still use crude oil as their main source of energy, and they are totally dependent on countries in the Middle East which have larger crude oil reserves. So, energy plays a very big factor in any economic activities within a country, and if it gets hampered, we see a drastical effects such as the recent Iran war, where the Strait of Hormuz has almost 20% of supply chain for crude oil for the Asian sector as well as the American subcontinent and Europe as well. When such kind of situation occurs, we can see that there's a disruption of supply chain throughout the global systems. For example, Strait of Hormuz has 20% of oil reserves, oil trade routes, and the recent war has completely blocked the supply of crude oil, natural gases to countries like China, India, which are currently suffering from global inflation due to crude oil prices hike. That's why energy acts as a very crucial pillar in the overall global economics. The fifth pillar is somewhat the trust the people have in the government, and this pillar is somewhat the foundational pillar which links all the pillars together. If we don't have enough trust in the government and the system itself, it starts to crumble. For example, monetary systems is a system set up by the government. If this trust in the system itself drops, then this pillar becomes somewhat unstable. And in the current war situation, you can see that the third and the fourth pillar, which is the trade and the energy pillars, are being impacted due to the ongoing war. If such kind of scenarios occur again and again, we see that there is a lot of inflation over a period of time. For example, during COVID, we have suffered similar impacts where the economic activities dropped in COVID and the government has to come forward and induce a lot of liquidity into the markets. The liquidity that was induced into the markets flowed into the stock markets, and then we saw a quick recovery after the 2020 crash in the stock market. But the impact of those liquid induction into the market has resulted into high inflation. The prices went up, cost of living went up, cost of housing went up, so all the cost starts increasing. And we were not out of the impact of COVID. Now we have the second impact, which is the war that is going on in the Middle East. So within a short period of 5 years, we have suffered two impacts on these pillars itself. If such thing happens repeatedly over a period of time and it induced a certain amount of inflation or hyperinflation into the markets or price hikes, common people start suffering due to it. And if common people start suffering, we see that the trust of the common people in the government start decreasing. If the trust decreases, then we see that this all the pillars that are supporting the overall global economics will start shaking. And if this happens, we can see some bad times ahead. On top of that, we have AI, which is inducing a lot of hype similar to what we saw in the dot-com bubble. but it is somewhat opposite. In dot-com bubble, we saw a lot of job creation during that time, but in the AI time, we see a lot of job cuts due to the automation of a lot of things. So it's somewhat similar to dot-com, but also opposite in the sense that we see a lot of job losses, a lot of hiring freeze. This basically results in slowdown in the economic because people don't have jobs, they don't have money to spend, and if they don't have money to spend and the inflation only goes on increasing, the prices of daily groceries increase, daily living cost increase, but the people are not earning enough. On the shorter time horizon of 5 to 6 years, we may see an economic downturn, so we should be ready for it. And why I believe that it's very mandatory to invest in stocks or invest in ETFs, because whenever inflation comes into hits the markets or hits a particular country, it always flows to the stock market first, and then it disperses to the in the hands of common people. And why I am highlighting these core pillars is because if these pillars are impacted greatly going forward, we may see a period of recession where there is no growth in economic activities, or we may see a longer recession period where there is no increase in GDP, which will basically slow down the economic activities within a country. And if this happens, we may move into 1 or 2 years of depression environment where there is no job roles, there are no hikes in the hikes for a particular job, but the inflation is skyrocketing. This create a very dystopian scenario where common people are suffering but the elite few are flourishing. And when this kind of situation happens, the power and money flows from bottom to the top of the food chain, and we don't want that. We want to be prepared for such scenarios, and the market is already preparing for such scenarios. You saw gold and silver, which are stated as a very safe asset compared to the traditional stocks, ETFs, and index, because they are rare metals. In the situation of uncertainty, it is very important to look for such opportunities where you feel that this particular asset is somewhat future proof. In such scenarios, your mindset should be of an observer, and you should always be preparing for such scenarios rather than just reacting to situations. So I'm keeping such a scenario in front of you. If you see that this 5 pillars of fundamental economics are getting impacted in your country, then it's very important to take a step back and look how you need to observe the situation and how you can prepare for the situation. I've already discussed in my previous video that how you can cope up with such scenarios. You always have to look for opportunities in the market where you feel that there's always a need to improve. You can look for crypto, Bitcoin, which is a very limited asset. You can look for gold, silver. You can look for assets which can sustain the impact of inflation. And I believe that investing is such an opportunity that you get to counter inflation if you are in a bad situation. You're always protected by inflation when you invest in something. And that investment are not limited to investment in stocks, investment in crypto, or even investment in gold and silver. You can do investment for your long term future. You can invest in a property, you can invest in a house, you can invest in your hobbies, you can invest in your future where you feel that this is very crucial part of my life for the next 5 to 10 years. If you want to prepare yourself for such black swan events, you should always try to sit back and be an observer than a reactor. This will help you in your journey, not in just life but in markets. If you participate in markets, let me know what do you think about the pillars of core economics. Do you think that there are some additional pillars which may impact the overall global economic situation? It will be very interesting to look at if you can add some value to the already content I have shared. Let me know what do you think about these pillars, and let me know if this is helpful for you. See you later.